And as we do that and we transition to our final panel here, we get to think forward and going towards Money 2030. And so I want to introduce our final panel. First, our moderator, Stephen Bohannon, is heading on up, the founder of Alchemy, and he knows what works and has looked at a little bit about what doesn't work, right? And next we have Tony Patel, the CEO of CU Direct, and he can hopefully give us an insight on auto lending income because it drives the bottom line of many of our credit unions. And maybe you brought a crystal ball with you, I'm hoping, something to give us what's happening in the future. The third person joining us up here is Joan Opp, who is the CEO of Stanford Federal Credit Union. And she has members from Google, from Tesla, and her organization is driven by innovation while partnering with fintechs. And finally, we've got Brett Martinez, CEO of Redwood Credit Union. And he says and talks to us about the credit union's brand really is around love. So how do we take that love into the future? Please take it away.
All right. Envisioning the future, predicting the future, easy to do. So I thought, I was thinking about this panel and kicking this off, and so I was thinking back. I remember when we started Alchemy in 2009, the thing that we used to always say was, what will banking look like in 2020? And that seems so far off. 2020 will never be here. We'll never even get there. But it's like, what's this grand plan? And the thought was, 2020, what will happen? And then we need to build a system for what banking will look like in 2020. But if I'm being honest, I would say it was more generic when I was thinking about, well, things will be more digital. There'll be fewer people going to the branches. There'll be more people going online. And that's fine, but it's not real detailed, right? It's not real specific. It's just more, better, faster, slower, these descriptors that weren't really specific. And then recently, I had the opportunity to go through, has anyone in this room ever been through a future vision meditation group session? Have you guys ever done one of these? Okay, back here. Okay, cool. Yeah, well, Joan, get ready for it. So we recently did this. So actually, we have a new CEO at Alchemy. It started about a year ago. And so one of the things he did, he brought in, we have a third-party consultants that come in to help us. We call our executive leadership team, we call it the first team. And so we brought these folks in, and it's about kind of team building and things. And they told us we had like a 2-day offsite to work on team building. And one of the things we had to do was sit in a room together. It's just one of the exercises. 10 minutes of silence, closing your eyes in a circle. But let me tell you, and look, if those of you know me, I'm skeptical about all these kinds of things, right? So to me, I thought it was just hokey. But as we did it, they said, okay, here's what I want you to do. So we all close our eyes, and they start saying things like, okay, think 5 years into the future, okay? What's the size of the company at that time? Pause. How many employees do you have? How many customers do you have? How do your employees feel about working here? How do your customers feel about you? How easy is it to do business with you? What's changed about the company? What are the biggest things? How does your working relationship with the other members on this team, what does that look like? How has that changed? And so you're sitting there and so what initially became this very uncomfortable thing with 8 of us sitting around silent in a circle with our eyes closed, then you start really thinking about this. And so then they challenge you to be specific. And then when we were done, we all wrote down on the paper, we opened our eyes, and then we wrote down on the paper what it was. No one knew what each other's were, and then they collected them and then put them up. And it was amazing to see just the way we envision things. Certain things, very, very common. Wow, it's amazing how much we're on the same page. Other ones, very different. Wow, it's amazing but you know what's so important is that if you've got a group of people, whether it be a close executive team like that or a community like this, if our vision of the future is disconnected, it will very much change the way we behave today, right? In other words, if my vision of what banking is going to be like in 2030 is very different than what your vision is, we're probably going to work on different things today. So one of the things that I want you all to think about, well, whether or not you all want to take that meditation exercise back, I will tell you, I became a believer in it. It's amazing to have 10 minutes of silence with nothing happening and just thinking. But one of the things I want to challenge you all, even after this panel today, is when you start thinking about where banking is going to be in 2030 and what you have to do, be specific. Really think about it. Don't just say things like, well, data is going to have a bigger part in it. Yeah, easy, good bet. It's like betting on black or red on roulette, right? No, pick a number. Pick a number on the table, right? So as we go through this today, I just want to say, regardless of what we talk about, which I don't know what this wonderful panel is going to say, I want you all to think about taking that back and getting kind of specific and thinking about specific use cases and how it's going to be a little different in your credit union in 2030, and then say, what do I have to do today to really manifest that vision, that future reality there? All right? All right, so hopefully that's a good enough setup for you. I'm going to start with you. So we think about 2030, banking in 2030. What would say, let's start with one. So let's say with what's the biggest thing that you think is going to be different in 20, or it's going to be like in 2030 that requires us to think about, invest, or change behavior today in order to get ready for it?
I think there's a lot of things. I would just start by saying, first, I apologize I didn't make it to these last couple sessions. I thought this has been really a good. I started in the first session yesterday, and I get to finish today, and so it's been really good for me. But I just think the change that's going to happen in the next 10 years is going to be greater than the change we've seen in the last 10 years. I just think it's going to be hard for a lot of credit unions to keep up. I really think it is. I think credit unions are going to be out of data centers by 2030. I think that's where
meaning they'll fully be in the cloud.
They'll be in the cloud. Yes, they're going to go in the cloud like everybody else. If you were to start a credit union today, you start it in the cloud. So I mean, there's a number of things I think that would change. But if that's the one question.
Yeah, great. Okay,
and
so
by the way, I've never met Stephen before, so nice to meet you. You see
so
how well we planned this panel?
No, but that's a good one, because when you think about it, even though we have various technologies today that are in the cloud, when you think about everything, everything being in the cloud, which ultimately would mean you wouldn't actually have to have a physical location, right? For staff, for call center, for sales, for loan operations, for anything else. So 100% in the cloud. So that's a good one. Joan?
So I had a whole 5 minutes ready to
go
talk about
ahead.
that.
I'm not
going to go into now, but I actually think that debit and credit as it exists today will be gone in 10 years.
How's that?
Well, I don't know that I agree with Todd on investing 5% of my savings in Bitcoin, but I do think that the technology isn't going anywhere. I think it's going to evolve. Right now it's investments, but I think it'll evolve into something more stable. I think the end game is to replace the rails. I think that's why there's been so much investment in it. And the retailers, obviously, if you get into a stable coin and it's in your wallet like a debit and credit card is today, and you're making payments, and that's a more cost efficient, there's a cost to it, you shift the cost. But I just think that's what the end game is. And I just think that we should all be paying attention to that. Payments, lending is where we make our money, right, as financial institutions, but people doing their payments is what keeps them involved with you, and then you're thought of first for that loan because you're my primary financial institution. As the payment world changes, and I think it's one of the biggest components of our business that's going to change in the next 10 years faster than it did in the last 10 years. I agree with Tony there. We have to be paying attention, and we have to be prepared to copy and evolve, see what's happening, right? We don't have the investment to put into it. I think people were talking earlier about investing. I actually think that's the wrong strategy. I think we could invest $100 million in something. There's bigger players than us investing hundreds of millions of dollars into what's going to happen. We need to be paying attention to it and spending our resources in order to be prepared to move. So that's what I think.
Just to comment on that, if I can, just one sobering thought is that, I think the interchange on a per transaction basis that you're getting today is the most you're ever going to get going forward, right? So that's just going to go down. So it's all about volume if you are going to stay in this game, and it's all the other players that are coming in at a much lower cost to be able to do it.
Joan, the point you're making is basically you have to stay up to date and on the edge of what payments are doing, because that, not because of payments in and of itself is the end game, but because it will affect the lending side of it. So you can't afford to just kind of wait and see on that.
Agreed.
Yeah. Brett?
So I'm going to take my 5 minutes. You guys close your eyes.
I love it. I love
and
it.
We're going to be quiet for about 5 minutes. So I think there's a big difference between change and pivot. I like the word pivot the other day. I've been in this industry for 36 years, and if I really think about it, there hasn't been a substantial amount of change. I think the cloud is more of a pivot. It's not necessarily changing our business model. I'm very positive about my credit union's future and the future of the credit union industry. I think there's three things that is important: having a solid business model, having a strong brand, and continuing to differentiate, just to differentiate. Do everything different than everybody else does, because there's too much of that other stuff, whatever it is. Looking into the future, I think, is interesting, and certainly we've all been in these sessions where they've talked about the future. There's this one thing that has stood out to me in 1994, being in multiple planning sessions and lots of conferences, and they were being very specific. 20 years out, which was 2014, no cash and no branches. How'd that work out? Right?
No checks. Checks
Yeah,
are going away.
checks, no checks, no cash. Checks almost got there. So when I look into the future and think about disruption, I break our model into three different areas. So we bring in people's money and turn around and give them access to that money. I don't even think we give them return, especially in the past several years. So it's just the access point, which is payments. Turn around and lend that money out to people that are likely to pay it back. And then you have the interchange, or non-interest income, and payments and lending. There's a lot of pull. I agree with Tony. I'm very concerned about interchange moving forward. We're on our way to the $10 billion mark, and we get a $26 million hit on debit interchange as a gift to the $10 billion mark. So we're very focused on that. Overdraft protection and NSF, we all know what's going on there. So there's a lot of pulls on those. And we have 85% checking penetration, so all of this stuff is very important to us. On the non-interest income side, we have an auto dealership, an insurance agency, and a wealth management division to kind of offset and diversify that. So I look at those three buckets. What am I concerned about? I'm concerned about payments. And I said there hasn't been a lot of change in past 36 years, but the biggest change I've seen is since 2007, when Apple phone came out and smartphones came out. That's the past 15 years out of that 36 is where the change is. And the most amount of change that I've seen is in the payments area. So we've talked a little bit about, so iPhone came out in 2007. Venmo, which is owned by PayPal, started in 2011, became a verb, which is a big deal, in 2017, Venmo Me. And then Zelle, which a lot of you, I assume, are partnering with. There's 1,700 financial institutions that are partnering with Zelle. By the way, Venmo has there's 209 million adults in the United States. Venmo has 83,000 customers, and Zelle has a little over 100,000 customers. They're both growing. I think Zelle is about 55%, and I think Venmo is about 45% year over year. So that's something I think that we should be very concerned about. It's something I'm very concerned about. We're watching our trending and with our data, where our members' money is coming into the credit union and automatically going over to Venmo, which is now their primary financial institution. Graph that and see how that is changing very, very quickly over time. So our credit union did not go with Zelle. We created our own, what we call our RCU Pay. So it's our own P2P platform, zero cost, zero fraud. 75% is member-to-member transactions. Technology is great. Members, it's instantaneous. So the transfer is automatic. The part that we struggle with is member to non-member. You can send it to anybody, but they have to, it's next day. So there's a timing issue, which I think we can fix. And they have to have their own routing number, which is just makes it a little bit more difficult. And certainly we're not a verb. So it's growing, but we chose not to partner with Zelle. And if you think about Zelle and Venmo specifically becoming a digital bank, they're working on crypto, they're working on savings, they're working on budgeting. And yet, it's a verb, and several financial institutions have partnered with Zelle. So if I worry about something, and I don't worry about things too often, that's what I'm concerned about.
Side. All right, so let's do again. Let's think about a specific topic, and then make a prediction. And if you say I don't feel comfortable making the prediction, then don't make the prediction. Okay, so let's talk about again, this is 8 years, right? 2030. What will be the biggest difference of let's pick physical service channel. So let's talk about call center. How will that be different 8 years from now than how it is right now?
It'll be a lot more like Amazon. Remember, I think I said yesterday, how many times have you called Amazon, and how many millions of transactions they do a day and don't get phone calls. That call centers really, I think you need them, and you do have to have that member service because, but our technology should work well enough where they may not be needed that much,
Okay.
And if I could, because
Keep going.
I didn't get my 5 minute.
No, you can take it.
But I guess
I'm just trying to stimulate
yeah,
the conversation. But if you want to go on it, go on it.
Well, I just wanted to say, I think the whole key here is, I think the one word is relevancy. If we can continue to be relevant to our members, and you look back in 2000, there were 10,000 plus credit unions. In 2010, there were 7,500 credit unions, and now there's about less than 5,000. So that's the trend line that we're on. And I think this isn't new to anybody, but it's just something to think about. And as you think about relevancy, is there time to actually have a relevancy score? Can we actually say how relevant is my credit union when you're doing planning and things like that? And do we need to think about some other decisions? How do we there's been a lot of mergers going around. Not too many banks are buying credit unions. Credit unions I see are buying a lot of banks, but I think the thing that also I would put the relevancy kind of under, maybe a score in 4 different areas, and that would be, one, it's what a lot of people have been talking about, and I think a lot of the credit unions in this room have this, and that is trust. In their, how much do your members trust you? And it could be a net promoter score, it could be something along those lines. I think the other one is, your value proposition and how it measures up against the competition in some way that we have to be able to say that you are staying relevant. And the third is profitability. There's a lot of credit unions in this country right now that are not profitable. And I think those 3 things, and I think the 4th one that somebody brought up, which I think is really the key thing, and that is, do your kids belong to the credit union? I think if you get that, then I think you're going to be, and how many, my daughter, she's just 1 year out of school, and she was actually an intern at School's First Credit Union, and so she's been indoctrinated into the great philosophy that Bill and his credit union has. And for the last 2 weeks, she keeps, and she's 1 year out of school, has a marketing job. She keeps, sending me a note that, texting me saying, hey, this offer from Chase is going to give me $225 if I take this checking account. Should I do it? I keep telling her no. They're going to fee you to death then too. But she goes, that's a lot of money to me, So just like all the other stories we heard about kids, and she's a Venmo, user too. I just think keeping them engaged is going to be a key measurement that we need to have. So I just think relevancy is the key that we need to talk about as we go into 2030. And but it is going to be a different world for sure. And I think that's the year that I retire, so that's good too.
That's good. Well, you don't have to worry about it then. Joe, what do you think? What is it, if you were to vision that in 2030, what does the physical service channel look like?
So I'm going to go to your first question and back up to my 5 minutes. It's really hard to sit in between these two guys, by the way. So I think contact centers will largely be automated in a number of different ways. And I was at a meeting with several people in this room back in August where the CEO of Jack Henry gave an example of his son applying for a credit card, and he did something wrong and got a letter that said he did something wrong. Give us a call. We'll straighten that out and fund your card. And he was like, I'm not calling him. Because his dad said, what are you going to do? He's like, I'm not calling him. And he goes, I know what I did wrong now. I'm just going to go back in and fix it, and they'll send me my card, which is what he did. He didn't want to call. Right? So I think automation may be actual, voice automation, or it might just be text, it might be chat, it might be, but I do think the investment in technology for AI and RPA will largely automate, and I think the consumers of tomorrow don't want to make a phone call. And so I do think that'll be completely changed.
You think the chat bots and virtual assistants will get to the
It's
point?
going to get smarter and
they'll get to the
smarter and
point to
smarter.
where it's going to handle 90+%.
I think it already could if we. I don't think we're there yet, but I think the technology is there, and I think it's getting better. Back to just this whole 2030. I think credit unions have a great future. I think there'll be a lot fewer of us. And I think those that continue to thrive, and that's different than survive, but I think thrive will be paying attention to a number of these things that we're talking about. I do think payments is going to be completely different, but we have a huge opportunity to continue to be relevant, using Tony's word. I think fintech, we have to watch fintech in more than one way. We always talk about the technology, but we're very dated as an industry in how we approach business. The panel earlier talking about lending, we do lending very conservative traditionally, and the fintech have approached it from a much more get it out the door. Somebody talked about savvy money, clutch, like just no credit score, a different way of thinking about it. We have to stop the traditional way of thinking. And lots of us have management teams that have been in place for decades. And no offense to anybody in this room, but we need some new blood, right? We've got to think about things completely different. I mean, we've used, don't tweak it, just completely scrap it and somebody rebuild it. If I had the crystal ball, somebody said earlier, I actually had that in my notes. I'm like, I would love to have somebody up here that could tell me exactly what it's going to look like in 2030, but I don't think any of us know. But I think we would all agree that it's going to be a lot different than it is today. Right.
That's a lot. Only 8 years. That's when you think about, obviously, something that's been around for a long time. Only 8 years. So, Brett, starting with you, I got a pointed question for you. So, data, AI, ML, we hear these terms. And there's impact on sales, marketing, fraud detection, service. There's all kinds of impact. Where do you think, if you were to predict 8 years from now, we'll see the biggest impact of artificial intelligence and machine learning in the credit union business? Will it be on lending underwriting? Will it be on fraud protection? What do you think?
Yes. So data's, it's 7 years and 2 months away. It's not 8 years. So let's be specific.
January 2030.
So, I mean, we're implementing AI Zest on lending as we speak. I think fraud is definitely an area we talked about. Yesterday, getting into watching people's transactions and getting involved. We do that. I would also say that those people are in front of us every single day. So AI is going to be heavy on fraud. Call center, I think AI is going to be important on call center. And I agree with Tony that where we need to go is kind of the Amazon. You don't pick up the phone and call the call center. That's not going to be 7 years and 2 months out. That's where we need to be, but we're not going to.
You think it's going to be further out than that?
Yeah.
Okay. He disagrees. I like it. We got a disagreement here.
I agree.
Let's unpack this.
I agree where it needs to go. It's just not going to happen in 7 years. And so as AI we will implement AI in our call center, and we have a lot of work to do in our call center, but it's not going to get to the Amazons and.
Well, I mean, one of the things that Amazon does, there's a reason you don't need to call them generally, because they are a company that has built a platform on APIs that gives you incredible insight into all the back office processing of things. Obviously, you can track your delivery card down to it arriving at your house, right? That's why you don't call and say, "Where's my package?" You know that's where your package is, right? So I think that's one of the things until we modernize some of our back office systems is, well, hey, what's the status of that loan right now? Well, someone knows, right? Someone looked at the screen and told you, oh, here's where it is. It's sitting on this person's desk or whatever. But until that gets revealed, and think about payment processing, especially when you get to wires and ACH batches and things like that. Hey, what's the status of that? I see it's been submitted, but where is it? Has it left your terminal? Has it gone to the Fed? Where is it on their side? We have actually the insight to be able to expose all that for self-service. So those are some of the things I think we have to get to before we can have the Amazon type service, which is all self-service, but you got to expose this to me. And right now we don't. There's too much obfuscated from the member to where it requires them to call in to ask that question, right? So Amazon does an amazing job at that. It's pretty slick. All right. Let's talk, and I think it ties into fraud as well, but let's talk about fraud. It ties into payments as well. Let's talk about fraud mitigation. So like, where do you think the biggest, are we going to have, obviously we know there's going to be more fraudsters, right? Because it's easier to try to rip people off, from the comfort of your couch. But where do you think the fraud dynamic changes? Like, what's the new vector if you look 8 years that we have to be on the lookout for? What's the biggest risk for fraud?
Well, I was the reason I stepped out is I was actually at I'm on a board of a QSO that's here, that's member pass or bona fide, that's trying to mitigate fraud for credit unions. That's for identity and things like that. The thing that actually we were just talking about too is that there's the credit unions we're working with. Nobody has one way to deal with fraud. Nobody has one way to mitigate fraud, and I think that's. They become as smart as the people that are trying to prevent them. The fraudsters. So it's never going to be done. I think the biggest worry I have, given that everything is, on our phones, is that somebody's just going to come up to you and stick a gun in your face and say, get your phone out. Let's start transferring money.
Great point.
That is a very easy thing to do. Face recognition, and just have you just clean out all your accounts and send them somewhere. That is actually probably the one that I'm thinking. Why isn't that?
Good point. Before you say I don't have any cash on me, they say I don't need you to have cash on you. Pull your phone out.
Yeah, exactly.
And Zelle me.
We're all freaked out now.
That's a great one. That's a really good point.
It's a great one, but let's hope it doesn't happen. But it probably will.
That's actually a really good point.
Well, if Tony thought about it, somebody else has thought about that stuff.
I think the shocking thing with fraud right now is that people are so willing to send their money someplace that they have no idea, right? Because of the technology. So where's fraud going to go? The fraud we have today, if people just stopped and thought about it, it's not the old days of getting the skim on the back of the card, stolen or whatever that then somebody used that didn't involve the consumer at all. The biggest majority of fraud we have today, the consumer's involved in, right? They were tricked. They're just not thinking. We had a commercial borrower send $1.9 million thinking he's paying us off, and he didn't send it to us. It's like, well, how are you possibly paying us off if you send it from Bank of America to Chase to pay off your loan with us? We saved it for him, thank goodness, but because we could get a hold of somebody to freeze it. But people are so quickly convinced to give somebody all their credentials or to move their money so I don't know. Fraud to me today has very little to do with us and a lot more to do with just people and how they use today's technology to move money without stopping and thinking.
You think that will change in 8 years from now in terms of the attack vector? Do you think? You think? But you hear about it a little bit in the crypto world, right? Where you get certain exchanges and things that have been hacked, but generally you haven't really had a large scale hack of any major financial institution, at least not one that we know of. And you're right, the attack vector is the uneducated or unwitting consumer or small business, right? You think that's going to change 8 years from now as we educate people better and everything? Or do you think that the systems that we have are so kind of locked down that that's really kind of the only alternative for the criminal is preying upon the end user?
Yeah, so fraud's the area we've hired more people than any other part of our organization. It's the growing part. We're really good at it. We don't have the losses, and our members don't have the losses that most have. But it really, crypto's changing it. It's where we're losing because it's gone, right? Once it goes into that environment, it's gone. Data, we're talking about 7 years 2 months from now, be specific. Our data journey was about 7 years. First we had to get the data, warehouse the data, get good at that part, and then we're in the final process of teaching our people how to use it. And the fraud area, one of the ways we're winning in the fraud area is really using that data, not just having the data, but learning how to use that data to see things ahead of time. But crypto, I think, is the biggest change for us.
I've got kind of a lightning round of stuff, and then we'll be done. Is that good? Or questions? So I just want kind of maybe a one word or a short answer for each of these. In 2030, do you think the majority of credit unions will be banking cannabis businesses? Yes or no?
Yes.
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 You think the majority of credit unions will have a crypto offering that they have that allows people to be in crypto, whether it be buy, sell, hold, trade, whatever? Yes or no?
Yes.
We already do.
Yeah?
Yes.
Okay, majority. Okay. Do you think that by 2030, do you feel that the majority of credit unions will be underwriting loans off things other than FICO, a large portion of their loans?
Absolutely.
Absolutely was my word.
We're doing it. So
Okay.
yes.
A large portion of the loans already. Okay, good. All right, so those are a few quick little predictions there, and then I'll turn it over to you, Brandy.
Any questions out in the group?
So my question is, so we're talking about where we're going to be 10 years from now to keep up with Amazon.
7 years, 2 months, and 8 days?
So,
Brett?
all right, well, we all in this room know that Amazon is not just sitting on their thumbs, not making any innovation, right? So what concerns me is we're chasing Amazon today when the Amazon tomorrow is probably going to be crypto ready, have their own bank, not needing fintechs. Where does that leave credit unions in that world? And when does that conversation start having about the real doom and gloom of what is around the corner for us?
Well, I mean, we don't have a lot of control over what you're saying. I think the only thing we have control over is what you can do with your credit union and how you can make it better. And I would just say, as I said a little bit yesterday, and I'm a little self-serving on this, but I do think leaning into the QSOs, Todd, and they are keeping credit unions relevant. I mean, he has 30,000 ATMs he's connecting together. If you guys didn't have that, I think he wouldn't be very relevant today to a lot of your members. Hopefully we're doing that too with Origins. Cuddle is a verb, by the way, at the dealerships. So we have done a good job of creating a lending channel that you guys own and control. But we need to lean into the QSOs and try to connect them to the fintechs. I think that's where, like we're going with Zest and we're going with Informed IQ. I just think it's how do we work together now in these next 7 years to really improve, to try to Amazon our credit unions, I guess, how to make them better. And there's a lot of, there's 10,000 fintechs out there, and 9,000 of them won't be here in 7 years. I can tell you that. So we got to be very careful and work together to do that.
Why were you pointing at me when you said that? He said it won't be
I'm
here.
still trying to integrate.
I hope that was just your hands talking.
I'm still
and
trying to
nothing
integrate with you.
subconscious
Would
there.
you get it done?
Yeah, so a lot of this, what we are discussing, those can be only done by the employees that you have, right? Now, they are all so busy. Anytime you talk to them, they are busy and they are working overtime. What are you doing to kind of release that pressure from your employees so that they can do what you're talking about for the future?
I think so. I mean, I would say yes, employees are always busy, but work is like water. It finds its level. All right, so you have to step back and reprioritize, make them unbusy. I really do think everybody's always busy. That's been decades, right? So you just have to get busy differently.
But I think that's some of the value of fintechs, right? They bring the expertise. The partnering with the fintechs allows you to move quicker instead of doing everything in-house. The previous question about Amazon and the concerns around Amazon is actually my concern around Venmo and Zelle, right? Very specifically, that we should be very, very concerned about. They become a digital bank. Why do we not have our own payment system? Why do I have RCU Pay versus us, the industry, having our own P2P platform? And one of the things I'm concerned about with the numbers I threw out is it too late?
So I just have to add on that. I mean, I think this is where today you have a credit or debit card in the wallet, which people use to pay. You have to be thinking about being able to do the same thing with a digital currency, whatever that ends up being. Or I do think, you're at risk of losing, a mission share. I'll use Aaron's word.
And you said you had one more? Yeah.
So
Erin?
when I think of the future, I actually think the biggest changes is what's happening to society and to how a consumer thinks. So there's technology that's going to trend certain ways. How do you guys think of those two issues, and what's different about the attitudes of individuals and society as a whole and its shifts, and really where's the opportunities that we need to think differently that's past the trends going on in technology?
Like what would be one example of that, Aaron, just to spark us off?
Okay, so we're going through a huge phase right now in society on DEI as an example, right? If Black Lives Matters didn't escalate in 2020, you might not be going through DEI right now, but it did. And this isn't the only societal shifts we're going to have. So that's what I'm talking about. You got to watch, to me, society. And, I was talking to someone the other day, and I said, I don't care, management's so much more about psychology today than it's about anything else. And so that's what I'm talking about. It's the psychology of people right now.
I tell our team, if you're going to go back to school, go get a psychology degree versus a management degree. Because if you can figure out why people are thinking the way that they think. One of the things that we've spent a lot of time over the pandemic, but more because of what you're talking about, is doing a lot of training around empathy with our team. And that's had a big impact on them, with each other, with our members, and so that's our thing these days is empathy.
Yeah, what strikes me with what you're saying there, though, is it really is about what people think of credit unions and what they don't think of credit unions. The challenge I think we have right now is that we're not in the consideration set. And again, a lot of you've done great jobs with your brands, but this brand thing is a big deal. And credit unions, just the words itself, credit unions, is it'll never be a verb. It's a terrible words, terrible two words, right? So how do we really, right now, I'd say Navy Federal Credit Union owns our brand. I mean, they are making people think what credit unions are on Monday Night Football. I mean, a lot of you do local advertising, are probably doing a pretty good job of it in your communities, but on a nationwide basis, we've got to be in the consideration set of every community. And how do we get there? I know we've tried to do these brand awareness things, and I've been supportive of them. I know it's been very controversial, but somehow the credit union words and what people think of it and how they know it's better than a bank, we talked about that, is something that we need to get to if we're really going to be successful, I think.
Thank you. Yeah. And thank you to our panel.
I don't have, hey, this is a fantastic panel. I'm honored. Thank you all so much for doing this. And hopefully I didn't throw you too many curveballs there, and you're no problem. All right. Thank you.
Thank you.
Thank you.